Hey, what's up? It's Ben here. Passive income is a dream for a lot of people, and the question that keeps surfacing up is how do we get it? To put it short, it doesn't automatically come to you. You'll need to put in the time or money up front to start even getting an ounce of passive income. Some passive income doesn't require too much work, and some requires a lot of work. There are a lot of ways to generate passive income, and a couple of ways you can do it is via the stock market. You can invest in exchange traded funds, also known as ETFs, and also there are dividend stocks. So for the purpose of this video, I'm going to focus on dividends that come from stocks. So in this video, I'm going to go over what a dividend is, where and how to find dividend stocks, and provide you an example of how much you should invest if you want a monthly income of around $2,000 in dividends. And again, this is not financial advice at all. So what is a dividend? It's basically the distribution of the profit from a company. So whatever profits that a company makes, it can be distributed to its investors. Usually a healthy dividend yield or payout to its investor is up to 5%. You really want to be cautious of anything that's over 5% because companies usually can't sustain a yield that high over a long period of time, and their stock price usually drops tremendously. Basically, even you bought a stock that is yielding 10%, you can basically lose money with its falling stock price. But overall, at a 2 or 3% dividend yield, it's not that bad at all when you compare it to putting your money into a bank account and the bank only giving you a fraction of a percent. And when you invest in dividend stocks, there are some advantage to it. Number one, no matter what the stock price is, you get paid your dividend if the company is paying dividends, which is good if you're buying and holding for the long run. Number two, dividend paying companies are usually stable. They're usually market dominators and don't need to reinvest a lot of their money back into the company as much as a growth company would do. And if a stock decides to reduce or cut its dividend, its price will start to take a beating, so there's somewhat pressure and status to keep paying dividends. Number three, if prices are down, you get a higher dividend yield, which can increase your overall return on investment. And number four, you can reinvest your dividends and start compounding your money. And this is if your brokerage has that option set up. Now, let's talk about where and how to find dividend stocks. So there are two main ways to receive dividends. Usually the safest way is by investing in an ETF, which is just a basket of stocks. So this is really diversified. However, the dividend yields tends to be lower because sometimes these ETFs also hold non-paying dividend stocks. And this is usually the lowest effort way because you don't have to do a lot of research and you get the benefit of diversifying. And a good place to start checking out ETFs would be Vanguard.com. Not sponsored by them or anything, I just like their track record and their low expense ratios, which are their fees you pay for the ETFs. The second way is by investing in dividend stocks, which is basically buying individual companies, and this entails a bit more risk. But when you know what you're buying and do the research first, it shouldn't matter that much because you should believe in what you own, right? In the long term, you can build a portfolio with around 15 or 30 companies, which is almost like an ETF. And when you have multiple individual dividend paying stocks, it'll lower your overall risk. And some of the websites I use to find these dividend stocks are seekingalpha.com and dividend.com. Again, I'm not sponsored by them, I'm just trying to help you out. So here's what you check for when buying dividend stocks. This mainly applies to individual stocks, not ETFs. Key aspects to look for. Number one, dividend yield. This is the return you will get purely from dividend. Number two, payout ratio. Shows what portion of earnings are paid to its shareholders. Number three, history. For how many years are the dividends paying out? How committed is the company in terms of paying the dividends? Number four, stability of dividend. Is it growing steady and reliable? And number five, do you like the company? If you don't know anything about the company, then it's probably a good idea to stay away from it. So let me go over an example with you for a dividend stock. So for this example, I'll be using 3M Company. 3M is an industrial company that manufactures and sells a variety of products from safety to healthcare, but also consumer products like the popular sticky note and tape. So let's go over the 3M Company by the key aspects I've mentioned before. So for this, I'll be using Seeking Alpha, which shows you these aspects in one overview. First, we check the dividend yield. It's 4.04%. So for every $100 invested, you'll receive $4.04 in dividends. The ratio payout is 58.5%, which means that 58.5% of the profits will go towards dividends and the other 41.5% is used for the company. Normally, I would like to see the payout ratio below 50%. So also the company has enough capital to reinvest in itself. Then there's stability and growth, and you can see that for dividend growth, they have been paying out dividends and growing for 63 years and counting. 3Ms have been paying its dividend for 63 years, which definitely shows stability. And on here, you'll see that they have been increasing their dividends every year. Lastly, you have to ask yourself if you like the company overall. And if you just zoom out a 5-year chart, you'll see it's down overall 20%. Some people would say that it's not a good investment, but if I zoom out even more to the max, that's like a 2000% return. And essentially, it's up to you guys to decide if you like an investment or not. So now that we're able to understand dividends a little bit better, how much do you need to invest if you want a $2,000 per month dividend income, which is $24,000 on an annual basis? The answer to this question is different for different investments. We will use 2 different examples. The first one will be the Vanguard S&P 500 ETF, ticker symbol VOO, which basically represents 500 of the largest US companies, and that has a dividend yield of about 1.5%. I'm just rounding up to make the numbers better to work with. And for the second example, it'll be the portfolio with around like 5 dividend stocks. So if you want a monthly dividend income with the VOO ETF, you need to invest $1.6 million because 1.5% of 1.6 million is $24,000 per year, and divide that by 12 is $2,000 a month. Investing in ETF is the lowest effort way of investing, but as you can see, the dividend returns are not that great. Now, we are going to look into a 5-stock portfolio, all with a 20% allocation, and try to get a higher dividend return. Keep in mind, this is not investment advice, just an example. The stock that I'm going to use in this portfolio is 3M, Johnson & Johnson, Kimberly-Clark, Verizon, and Chevron. If we average that out, we get an average yield of 3.61%. With this yield, you can invest around $665,000 to get a monthly dividend return of $2,000 per month. This is a massive difference from the example of the ETF. And the reason why is because the 5-stock portfolio isn't as diversified as the 500-stock ETF. Therefore, high risk, high return. And if you were to look at your 5-stock portfolio every day compared to the S&P 500 ETF, you'll know that there will be major ups and downswings for the 5-stock portfolio compared to the S&P 500 ETF. And in the stock market, there's always money to be made, but it's just how you want to make your money. Is it to play safe, or is it playing those risky investments, high risk, high reward type of approach? Overall, I hope I was able to provide some insight to you and help you see that when you put some effort and time to learn about investing, it can immensely increase your returns. And of course, that's always a risk in any type of investment, but there's no risk for you to watch my videos and see how my portfolio is doing if you subscribe. Anyways, hope you like this video. If so, feel free to give it a like, and as always, I'll catch you next time.